So you've probably seen the ads, right? The flashy lifestyle, the laptops on the beach, all thanks to Forex trading. But what is it really all about? Well, in this explainer, we're going to cut through all that noise and give you a super clear, no-nonsense look into the world's biggest financial market. All right, so here's how we're going to break it all down. First, we'll tackle the big one, the dream versus the real danger. Then, we'll get into what the Forex market actually is. After that, we'll get you set up with your first trading toolkit, we'll look at the anatomy of a trade, and then, and this is the most important part, we'll get into risk, reward, and the mindset you need to even have a shot at this.
Okay, let's dive right in. The dream and the danger. We're going to look at the incredible promise of Forex trading, and then the stark reality that honestly every single new trader has to face.
I mean, the dream is powerful, isn't it? This whole idea of generating money with just the click of a button. No office, no inventory, you can be anywhere in the world. And with things like prop firms offering huge amounts of capital, the barrier to entry seems like it's never been lower. It's a really tempting picture.
But here's the reality check, and it's a big one. The industry stats consistently show that something like 90% of new traders fail. They wash out. And it's usually not because the market is some impossible puzzle. It's because they jump in, chasing that dream, without ever really understanding the mechanics, and even more importantly, without understanding their own psychology.
So how do you make sure you're not in that 90%? Well, you start by building a proper foundation. You have to know the arena you're stepping into. So let's break down what the Forex market actually is.
Okay, so at its absolute core, Forex, which just stands for foreign exchange, is super simple. It's just the act of swapping one country's currency for another. That's it. As traders, what we're doing is speculating on how the value between those two currencies is going to change.
And here's the thing. Currencies are always traded in pairs. You can't just buy the euro. You have to trade it against something else. So, the first currency is called the base, and the second is the quote. Let's take the most common one, EUR/USD. If you buy that pair, you're literally buying euros and selling US dollars at the same time. You're making a bet that the euro is going to get stronger against the dollar.
And the scale of this market, it's just staggering. We're talking about almost $8 trillion traded every single day. I mean, that absolutely dwarfs all of the world stock markets combined. Now, why does that matter to you? Well, all that volume, what we call liquidity, is what allows us to jump in and out of trades almost instantly with really, really low transaction costs. And because it's a global market, it literally never sleeps. It's running 24 hours a day, 5 days a week. It's like a giant relay race. As the trading day is winding down in Sydney, it's just kicking off in Tokyo. Then Tokyo hands the baton to London, and London passes it over to New York. It just keeps going.
Okay, so you get it. It's a huge 24-hour market. But how do you actually plug into it? Well, the good news is you don't need a ton of fancy gear. But there are three essentials that you absolutely must have to get started safely.
First, you need a broker. Think of them as the middlemen, connecting you to the market. Second, you need a trading platform. This is your software, your command center. Something like MetaTrader 5 is super common. It's where you look at charts and actually place your trades. And third, and listen up, this is the most crucial tool of all, a demo account. Seriously, it's like a flight simulator for trading. You get to use real live market data, but you're trading with fake money. It's where you practice and make your mistakes without risking a single real dollar. All right, you've got your toolkit. Now we need to learn how to speak the language of trading. When you go to place a trade, you're going to see a few key terms pop up over and over. Let's decode them right now, so you know exactly what they mean.
First one you'll hear all the time is the pip. It just stands for percentage and point, and all it is the tiniest standardized move a currency pair can make. So if the Euro-USD goes from 1.1150 to 1.1151, congratulations, that's a 1 pip move. It's the fundamental unit we use to measure our profits and our losses.
Okay, next up is lot size. Now this is what gives that tiny little pip its actual dollar value. The lot size is just the size of your trade, your position. The bigger your lot size, the more money each one of those pip movements is worth. And that's a double-edged sword, right? It magnifies your potential profits, but it also magnifies your potential losses.
Now this next one, this is probably your single most important safety net as a trader. It's called a stop loss. It is an automated order you set before you even enter the trade. And what it does is it automatically closes your position if the price moves against you to a specific point that you decide. It lets you predefine the absolute maximum amount of money you're willing to lose on that one trade. It is non-negotiable.
And then you have the flip side of that coin, the take profit.
Just like the stop loss, it's another automated order, but this one closes your trade and locks in your gains once the price hits your profit target. This is what keeps greed in check and makes sure you actually take profits off the table when your plan says you should.
Okay, so all of this, the pips, the stops, the platforms, it all leads us to a final and honestly most critical section. Because here's the real secret. Successful trading isn't about finding some magic indicator or a secret pattern on a chart. It's a game of math, it's a game of risk management, and more than anything else, it is a game of psychology.
And this right here is the golden rule for survival in this game. Never ever risk more than 1% of your entire trading account on a single trade. Think of your account like a submarine with a bunch of sealed compartments. If you take a hit on one trade, that 1% loss is contained. The leak doesn't sink the whole ship. It allows you to stay afloat and trade another day, even after a string of losses.
And that brings us to this critical idea of the risk-to-reward ratio. You see, being a profitable trader isn't about winning all the time. In fact, you can be wrong more often than you're right and still make money. How? By making sure that your winning trades are significantly bigger than your losing trades. A common goal for pros is a 2-to-1 ratio. You're risking, say, $100 for the chance to make $200.
And this right here is the perfect example of why your win rate on its own means absolutely nothing. Look at Trader A. They're winning 75% of the time. Sounds amazing, right? But they're only breaking even. Now look at Trader B. They lose way more often, winning only 30% of their trades. But because their wins are so much bigger than their losses, they are consistently profitable in the long run. That is the power of what we call positive expectancy.
You know, there's this great quote from Mike Tyson. Everybody has a plan until they get punched in the mouth. And wow, does that perfectly capture trading psychology? It's one thing to have a great plan on paper. It is a completely different challenge to actually execute that plan flawlessly when your real, hard-earned money is on the line and your emotions, fear, and greed are screaming in your ear.
And really, that's the ultimate question it all boils down to. The system itself is actually pretty simple. It's the execution that's hard. So you have to ask yourself, are you trading your plan, or are you trading your feelings? Because the path to consistency isn't about being a fortune teller. It's about having the discipline to follow a plan with a statistical edge, day in and day out. It's about mastering your process and ultimately mastering yourself. That's what separates the 90% from everyone else.
If you want more content like this, make sure to subscribe. And to get started with trading right now, check the link in the description. See you there.